Good day, everyone. We, Group 6, are here to present on the topic Innovation in Corporate Banking. So, digital may be binary, but service is not. To improve the quality of client relationships as well as their own performance, corporate banks need to apply digital tools and practices more broadly with greater nuance. As it is now, traditional corporate banking service relies almost exclusively on the acumen and interpersonal talent of relationship managers to build and deepen corporate relationships, acquire customers, and drive revenue. But this approach no longer delivers the revenue that corporate banks need in a slow growth, yield deprived environment. It's time for corporate banks to change the way they serve clients. They need to start employing a mix of digital and human enabled services that will enrich the client experience, improve cost performance, and sustain growth. Leading banks will go a step further and transform their relationship models by providing a different mix of digital and non-digital services for each digital sector. A service, a self-service experience for small businesses, a hybrid man and machine offering for my mid-market clients, and a highly personalized digital augment service model for large corporations that have the most sophisticated need and requirements. Existing roadblocks in the digital transformation of corporate banking. The pace of digital transformation in corporate banking is slower in comparison to retail banking. Many existing dilemmas reside with this segment, which causes a hindrance towards effective digital transformation. First, monitoring and management. Portfolios and positions in the corporate bank need monitoring and management, which might be challenging to go digitally. Corporate bank customers go beyond looking for banks that provide financial services. They often partner to help them manage their business properly. Second, more at stake. The relationships in corporate banking require more commitment from customers and banks, which can be challenging to achieve. Since the stakes are high, the risk also increase the reluctances to foray in digital transformation in corporate banking. Third, complex to implement. Retail processes are more straightforward and more lenient to understand, making it easy to adapt digital transformation process without a hassle. The services in retail banking are also very productized, making them easy to navigate. On the other end, corporate banking might mean that a large corporation has many accounts across geographies, currencies, and banks, complicating it. Fourth, corporate banking in relationship driven. As opposed to retail banking, corporate banking is developed by relationships that might have been several years built in some cases. Many of these relationships were from in-person meetings and interaction using proper documents. It has been challenging carrying over and using digital transformation in corporate banking for these relationships.
Now we'll be talking about the digitization in corporate banking. It can offer numerous benefits to corporate bank, enabling them to improve their operation efficiency, enhance customer experience, and also manage risk more effectively and drive innovation. First one would be the faster and more efficient operation. It can help the corporate bank streamline their operations by automating manual tasks and optimizing the process. This can reduce the turnaround times and cost while increasing the accuracy and productivity. For example, the workflow can be digital and can automate loan processing and account opening, reducing paperwork and manual data entry. Second one would be the enhanced customer experience. It can provide corporate banking customers with a seamless and convenient experience, enabling them to access banking service anytime, anywhere. This can lead to higher customer satisfaction, increased loyalty, and more cross-selling opportunity. For example, the platform can provide customers with personalized assistant and 24 by 7 access to account information. Third could be the improved risk management. It can help the corporate banks manage risk more effectively by using data analytics and machine learning to detect potential risk and fraudulent activities within the banks. This can also help bank prevent financial losses, protect customer data, and enhance compliance with regulatory requirements. For example, the tools can help the monitor transaction data in real time, flagging suspicious activity and triggering alerts for further investigation. Next could be the greater innovation. It can enable the corporate banks to innovate and introduce new products and services faster, helping them stay ahead of the competition and meet the evolving needs of their customers. This can open up new revenue system and customer engagement opportunities for the bank. Next would be the cost saving. It can help the corporate banks reduce their operating cost by automating manual tasks, reducing the paperwork and streamlining process. This can help the bank to become more efficient and competitive and ultimately lowering their cost of doing business. Next one would be the empowering users. Digitization can enable corporate banks to empower their users with self-service options such as online bank portal and mobile apps. This can give users more control over the financial activities and improve their overall experience with the bank. Next slide, please.
So now we are going to talk about the 4 key areas that the corporate bank should focus on for the innovations. So first is strengthen client relationships with differentiated multi-channel coverage. It will help leverage needs-based client segmentation to differentiate coverage. Bank should create omni-channel models with intensified personal touch, and they should heighten relationship manager product skills and empathy. Redefine product offering. Banks should build cutting-edge cross-product platforms. They should react to commoditization and migrate non-differentiating products to platforms, seamlessly integrate products into customer value chains. They should also digitize process end-to-end. They should take a client-centric view on end-to-end journeys based on 99% straight-through processing. They should scale up and go beyond core production processes and should leverage and embed new technologies along value chain, example robotics. They could also redefine target operating ID model and review make or buy strategy. The next thing they could do is build advanced analytics DNA. They should set up or enhance data infrastructure and governance in their organizations. They should try and build internal advanced analytics capabilities and apply them in each step of value chain. They could implement industrial use cases and scale up, or they could create continuous feedback loops and explore new analytics and external data. Next slide.
Now talking about the way towards the creation of next generation bank. First, the bank should enrich their customer experience. They should provide differentiated services. Banks are always looking to strengthen their relationship with corporate clients, mainly by providing differentiated services and improving their overall experience. Next, the improvement in basics like OCRs, APIs, RPAs. They should implement these technologies to enhance and customer experience and improve user journey. Next, digital transformation across all domains. Digital transformation is not limited only to the front office, but it is spanning to middle and back office as well. Improving clients and staff. Improving them with better data analytics and self-service tools to draw meaningful insights from this raw data and using it for serving the customer better. Next is detecting customer dissatisfaction. Using machine learning and natural language processing, they can leverage to detect customer dissatisfaction. Improving their staff with interactive tools that demonstrate the value of product services to their customers. Next is strengthening organizations. To strengthen their organization, they should adopt design-centric approach and collaborate with firms who are implementing best practices. Banks need to adopt their business and operating models that focus on customer relationships in order to meet evolving corporate clients' demand. Next point to strengthen the organization is to shift from inside out approach, which is a product model approach, to embrace the platform model approach, which is an outside in approach. Last point to strengthen the organization is implementing platform banking. Banks should embrace upon open architecture and place itself or at the center of the client engagement by entering into partnerships.
So we know that disruption or innovation in an industry needs converging of technology. The industry cannot assess only one technology and use it for its competitive advantage. So the technologies that have been converging in corporate banking and causing disruption and innovation are as follows: artificial intelligence and machine learning. AI and ML are increasingly being used in corporate banking to improve risk management, automate processes, and enhance customer experience. The second being blockchain technology. Blockchain technology is being used in corporate banking to enhance security, transparency, and efficiency in areas such as trade finance, supply chain management, and cross-border payments. For example, the Corda blockchain platform is being used by banks now and other financial institutions to automate and streamline trade finance processes. The third being cloud computing. Cloud computing is being used by banks and fintech companies to store and manage vast amounts of data, as well as to provide cost-effective and scalable computing resources. For example, JP Morgan Chase has partnered with Microsoft to use Azure, Microsoft's cloud computing platform, to develop and deploy cloud-based services and applications. The fourth, application programming interfaces, APIs. APIs are being used in corporate banking to enable seamless integration between different systems and applications, as well as to facilitate and exchange the data and services between banks and third-party providers. For example, open banking initiatives in Europe and other regions require banks to provide APIs that allow third-party providers to access customer account data and initiate payments. The last being Internet of Things. Internet of Things, IoT, is being used in corporate banking to enable new forms of payment and financial services, as well as to enhance security and risk management. For example, wearable devices like trackers can be used to authenticate payments and transactions, while connected device in the same can be used in the supply chain and can be used to track and monitor shipments and inventory in organizations.
So now we'll discuss some innovations that has occurred in the corporate banking sector. So we'll start with sustaining innovation. First, we have seen in 2019, JP Morgan Chase announced a $11.4 billion investment in technology to enhance its existing products and services, which included internet banking and mobile payments. And secondly, we have also seen HSBC adopting of blockchain to expect it to reduce the cost and improve the efficiency in trade finance. Coming to low-end disruption, Robinhood, it was a fintech startup, disrupted the brokerage industry in 2013 by offering commission-free trading, initially targeting young and inexperienced investor. TransferWise low-cost money transfers, it was another fintech startup which disrupted the traditional remittance industry by offering low-cost real-time money transfers. Now coming to new market disruption, Safari.com launched M-Pesa, a mobile money service that allowed users to send and receive money through their mobile phones. The second one is Cabot's online lending of small business. It disrupted the traditional lending industry by offering online loans to SMEs that were mostly overlooked by traditional banks. Now coming to discuss the emerging digital archetypes. So basically there are two emerging archetypes, which one is virtual and the other one is binary. The virtual is a digital first and user-friendly automated platform and self-service application. It draws information automatically to generate pre-approved credit limits. It also minimizes the human interaction and it makes the client onboarding process entirely online. It reduces the cost and increases the productivity and scalability. Banks such as Tide, JP Morgan, and BBVA Compass are already using AI-enabled systems and advanced analytics to make small business lending decisions. Now coming to binary archetype, it focuses on providing a high-touch, digitally enhanced relationship that allows RMs to offer personalized insights and responsive service. It also uses software and analytics that gather intelligence and that can be used for predictive risk modeling and improve client acquisition and cross-selling. It is well suited for clients with significant liabilities, bespoke hedging needs, and who are willing to pay for premium service. Thank you.